Okay, so yeah, hello everyone. Okay, so let's start. Just to quickly remind you, my name is Dmitry and I'm the portfolio manager trader. Today we will be specifically talking about three ways of how you can trade, invest, and hedge your positions on the cryptocurrency market with all of these instruments that we have at Bitsgap. So, an all-in-one platform to unite all of your exchange accounts to trade futures, to automate your trading with automated bots, and an ordinary spot trading. So everything is here. So we will go through all of these instruments that we have, and I will also provide you with some tips and clues regarding automated bots, risk management, focal principles, and some other tips as well. So let's start, and we will start with the spot trading, and basically the one that we have on a recently updated dashboard. So I will show you how to quickly uh, make trade decisions, how to quickly analyze the market so that to enter the market in time. Because on the cryptocurrency market, volatility can be insane sometimes, and that's why we don't want to waste time, and that's why it is really important to make decisions quickly. So let's go straight to the platform. Yeah, hello Mario. So yeah, that's the uh, new dashboard layout that you see once you log in and once you press the switch to the beta mode. Right now I'm on the beta mode, and you can always switch back to the stable version as far as we are in the beta mode, but soon this will no longer be an option, and we will be trading on this fresh layout as the one you see right now on the screen. So as I always start with, on the left side you have what I call the analytics and the data you need to analyze the buying and selling pressure on the market. So that's the order book. Here is everything pretty straightforward, simple to understand, so no need to explain further how the order book works. So below you have recent trades, just to see what is the, once again, the buying and selling order flow right now on the market. And the one that we have at the very bottom of the left side of the screen is what I call the buying and selling pressure indicator, which is basically providing us with an information regarding of whether bulls or bears on the market right now are winning. So it's clearly that within the period of 1 minute, the buying pressure is severe. So that means it's like 3 times more than the selling pressure. But in general, if we look at the period starting from 1 minute up to the possible one of 30 minutes, you will see that the selling pressure is actually bigger. So that basically means, but for this cryptocurrency that I have, that's comp trading to USDT, some traders, they are fixing their profits. As you see, this market was rising steadily. So if we switch to, let's say, Bitcoin to, well, actually I'm fed up with Bitcoin, maybe let's use Ethereum this time. So let's be unique this time. Ethereum USDT. So for Ethereum USDT, what we have is that the buying pressure here is, well, it exceeds the selling pressure, and that is the primary indicator that the currently rising trend is steady, all right, and most likely it will reach the resistance level at which we will see some resistance and selling pressure, of course, and hopefully it will breach the resistance level. Until now we are having a quite strong bullish momentum here, so most likely it will reach this very top point of the resistance. All right, so that's the way of how you can use the left side of the dashboard, which provides you this analytics. And of course you have in the center you have the chart. You can apply indicators, you can apply well, whatever you need, like Fibonacci retracement levels. So all the tools here at your disposal, depending on your trading style and what are the tools you prefer. When it comes to the technical analysis, all the tools are here for you, so no need to use the trading view platform as well. Basically you have this trading view over here, so no need to open trading view. That's just no need in this case because everything is already plotted here. And of course now we go to the right side, that's the decision making side, and here you have an ordinary limit order where you can have the buy limit or the sell limit order. That's basically the order which allows you to buy crypto at a specified price which you set. So as soon as the market reaches this target price, it executes the trade. And until that, it just stays in the order book. And as soon as the market reaches this price level, then it will be filled. All right, so that's the way it works. And remember that for the limit orders, when you use them, you are the market maker, and cryptocurrency exchanges, they treat well market makers, and that's why you have to pay a fewer fee compared with the market order. Because when it comes to the market order, for this type you have to pay an increased fee because of the priority that you get here. So that's the first priority order. So if you want to enter or exit the market instantly, then in this case market order is for you. You can instantly sell the crypto or you can instantly buy the crypto. So you will basically act as a market taker because you take the liquidity instantly from the market, and that's why you pay a bigger fee in this case. So with limit and market orders, everything is clear. What I want to show you here is the way you can calculate your projected return and projected loss based on take profit levels. So take profit stands for the price level at which you expect the market to basically lock in profits. All right, so assume that you want to buy Ethereum at current price. Let's say, okay, for this exchange I have no funds. Let's actually switch to the demo mode and let's go to Binance, Ethereum. Where is it? Okay, so here it is. So once again, the price 25%, so that's gonna be 159 USDTs. So let's assume that I expect the market to reach at least 630, and notice that the system automatically calculates, actually let it be 635. The system automatically calculates what is the profit in this case. So that's going to be 2.9% of the profit. You can also play with the profit. So no need to set the target price. You can set the profit. Let's say you want 4% of the profit, and it will automatically calculate the price at which this profit is achievable. So that's 642 in this case. Then you can add multiple take profit levels, and by that you just spread the risk. All right, so for having 5 orders in total, you just basically let the system to lock in profits as the market is rising step by step. All right, and the way you can set them is once again with the profit column here. Let's say we want 7%, then after 10%, and the last one at 12%. So as soon as it rises by 12% from the entry point, this will be your last take profit. And for this trade, if all of these take profit levels are triggered by the market, then your projected profit is going to be exactly 11.81 USDT. All right, and when it comes to the stop loss, it works the same way. So it just calculates the percentage of the loss. Let's say you want to, for this trade, for the potential of 11.81 USDT, you want to risk no more than $5. So you just have to play with the number in this case. So what's, yeah, so you see approximately to risk only $5 for the profit potential of $11, your stop loss must be at the price of 596. All right, and that's the focal principle of portfolio management and basically risk management, because your return to risk ratio must be bigger than 1, because otherwise there is no sense to take a bigger risk for a minimum profit. All right, so you see that here profit exceeds like by twice almost, whereas if you would have the projected profit, let's say $10, and risk $20, then this is not a wise trade. All right, so consider other options to trade. All right, because it makes literally no sense to risk twice as much as you would otherwise get from this trade. So that's the basic principle of risk management. And here with this instrument, you can always pre-calculate the potential profit and potential risk for this particular trade. And then you just have to click on buy, and it will automatically plot all of these levels. So it will plot take profit and limit buy order. So let's play with it. Buy Ethereum. So you see, you get instantly the notification. You will find your position in open orders, which is over here. You see the exact price, the amount, and if you click on the plus button here, you will find all of these take profit and stop loss orders, which you can, by the way, cancel, or you can click on the pencil over here and you can make adjustments. So as far as the price is trading above our trigger price, which is 605, we still have time to make adjustments if we need to do these adjustments. And that's the way of how you can do this. You can also cancel out the take profit and stop loss if you think that you no longer need them. All right. But I actually strongly recommend you to trade with the stop loss, just to be sure that your risk is limited to a certain level and you never risk 100% of your total balance. All right. And yes, so that's what it takes to initiate limit order. With the stop limit order, everything is also crystal clear. We don't want to explain this today. I want to show you another one which we've just added. Well, not just, it was added like maybe a month ago. The TWAP order. So the TWAP order, and let's use another coin. Let's use AVUSDT. The TWAP, like the concept of this order is to sell or buy the crypto proportionately within a certain period of time. So let's say I want to sell 4,000 ADEs within the period of 6 hours with 50 orders. So the question is, why would I do this? Why would I split my sell on 50 orders? All right, so let's actually use a bigger number, which would make more sense. So the TVAP order is like a cool feature, like it's a cool instrument for those cryptocurrencies that are uh, that have the capitalization uh, comparatively low with Bitcoin or Ethereum. So let's say below 50 million, below 10 million of capitalization. So these are highly illiquid coins. So that means if you have a big stake in this coin, let's say 35,000, most likely with one trade, if you would go market sell, you would create, I mean, you would significantly affect the market, and your average sell price would be not as high as you would expect it to be. So you would end up somewhere selling at this price, most likely because of the illiquidity. So that's the candle that you would create on the highly illiquid coin. That's why you don't want this to happen, and that's why you split this big chunk of your stake by 50 orders. And within 6 hours, it will execute 50 sell orders, and by that, you will smoothly sell this entire position without significantly affecting the market. And in this case, your um, average price at which you sold this coin is going to be way higher than if you would sell it with one market sell order. All right, and same applies if you want to buy a big portion, like you want to buy a big stake of an highly illiquid coin without affecting it significantly, because you always want to buy at the highest price possible, and you want to buy something at the lowest price possible. And with the TVAP, uh, if you have like a big pocket, all right, so you have a lot of cash and you want to diversify your portfolio with illiquid coins, then it can be the case that TVAP is what you are actually looking for to make sure that your average buy price and your average sell price is optimal. All right, so that's how you use the TVAP. Okay, so I see that Chandra Morgan is telling me that the view is different on his main page. So yeah, maybe you entered the room later than as we started. Well, you have to click on the avatar here, and you will see this star, and by clicking on it, you will automatically switch to the beta mode, the one I'm actually using right now. So that's how you switch to this view. So okay, that's enough with the TVAP. Another cool feature that we have is the balance, and in the balance you now can click on the cryptocurrency instantly, and it will show you the list of all cryptocurrencies to which you can trade this crypto, to which you can buy or sell this crypto. And that saves some time, all right, because otherwise you would go like this, you would have to type in Bitcoin to see all of the pairs to which it is trading, whereas here instantly you get this list. So it saves 3-4 seconds, and on the cryptocurrency market, even 3 or 4 seconds, they can be vital. All right, so that's basically what I wanted to show you on this new dashboard. Open orders, cluster clear, positions. So far these are my open trades. You see, that was actually the sample trade that I initiated. You see the exact date when I initiated this trade. So all information is here. You will find your order history as well here to to analyze your trades, to find where did you make mistakes and which trades you should avoid, which trades you should trade, at which you are good at. So this allows you to analyze your winners and losers. All right. So it can be the case that you are better at trading Bitcoin comparing with trading with altcoins, and you will find this information as you analyze your positions, your order history. So that's how you use these uh, columns here. All right. So now let's move on, and I will present to you quickly futures trading. So just to quickly remind you that for futures trading, you must have a new API key to trade. So right now we have futures trading enabled on Binance Exchange. So all you have to do is just to create a brand new API key, but this time make sure that you edit restrictions and you have the cross at enable futures. All right. So you have enabled futures. Otherwise, wouldn't be possible to trade futures. So once again, step 1, you go to Binance. Step 2, create API key. Step 3, edit restrictions, enable futures. And step 4, you add API key and secret key right here where we have my exchanges. And you just add exchange. Yeah, so here the way it works. So that's my ordinary Binance and that's my Binance futures in this case. Even though the same exchange, but since the accounts are different there, because you know that on Binance futures the account is separate from the spot exchange, so that's why you have to have two APIs in this case. All right, so let's now go back and continue with our presentation, and I will show you futures trading. So with the futures trading, you see I already have some open trades, comp trading to USDT and 0x. You see the exact leverage that I have here, and the size, the entry price, the current P&L, as well as the profit, and that's actually the return calculated to the equity. So since this is a leverage trade, so I took the margin to open this position. That's why my profit here is 232%. All right. And most importantly, you see the liquidation price. So that's the price at which, if the market goes in the opposite direction as you predicted, it will automatically, the exchange will automatically liquidate. It will close your position. All right. That's because it is a margin trading, and in margin trading, it is implied that you basically borrow the money to open larger trades. So the bigger is the leverage, the more risk you take, like the more borrowed money you take from the market, and that's why the dependence on the liquidation price and your available margin here is significantly increased in this case. So make sure that you fully understand the mechanism of the leverage trading and what it takes to borrow money when trading futures. All right. So yeah, that's the interface, and you see that it's now 0% margin ratio. So the bigger the number, like if it's gonna be close to 100%, then it means that my that my position is very close to liquidation. So right now it's 0%. Everything is fine in this case. The difference from the cross over here and isolated mode is the same as on Binance. All right, so nothing new here. The cross is you basically risk your entire balance to initiate the trade, and isolated you just have the limited margin for each trade. So you will never lose more than the the specific amount that you set on this trade. All right. So for this one, for comp, I have the cross margin, which means I risk my entire balance of 153 USDT, and in 0x I have isolated mode, and that means that I will not lose more than this amount. And I can always actually add some funds to change the liquidation, all right, to make my gap wider. All right, so that's the idea. um, what else should I show you here? Okay, so I will not focus on the specifications of this post only time force. That's like, you can all read it here and play with it in any case, because it really takes time for you to find your own strategy and what is like the optional way for you to close the trades. And the only thing for you to remember here is, if you want to uh, initiate the trade, all right, so make sure that your reduce only is not on. So when it is off like this, you initiate a new trade. When you use the reduce only, it will plot a limit sell or limit buy order for your already existing trade. So for example, I have, you see, comp here, and for comp I already have the stop limit at the price of 89, sorry, 98. 98, yeah, which is right over here. And the way I've created it is just using the reduce only. All right, and same for the take profit, which is right over here, and I use the same reduce only for this trade. So as soon as the price reaches either this level, hopefully, because over here is my profit, but it can also reach the stop loss here, where it will automatically close the trade. All right, so nothing new here. All of the order types, they are originated from the spot market, so nothing actually new here, except the fact that you have to understand the cross and isolated mode, so you can read about it here more, and of course what it takes to trade with margin and what are the risks in this case. And I highly recommend you, I urge you to use this stop loss the way I use it here in the comp example. So my take profit is over here and my stop loss is here. So stop loss is a must, all right, just to have a better sleep. Hope you understand me. So now let's go on, and finally, well, actually my favorite topic here is automated trading with AI algorithms that we have here at Bitsgap. And I will show you the tools, like the statistical tools that you can use to create your own unique strategies. And before actually executing these strategies, you can backtest them to see the potential return. You can use also other metrics that I will show you to estimate your average like daily potential return. And basically, I will provide you with some of these strategies, like ready-made setups for automated bots to use both for the spot and auto bot strategies. So let's go to bot section over here, and you will find that there is a chart here as well, because otherwise it would be hard to execute automated algorithms without actually seeing the chart. And I will switch to the demo mode, and the demo mode stands for the risk-free trading simulator, where I have virtual money to trade with. And that's a very cool thing, because with virtual money I can experiment a lot before risking my real capital. All right, so all the trades you see here, these are sample trades that I most likely launched during the last webcast. So you might be as well familiar with them already if you participated in previous webcasts. So far, you see, that's the trade action of my automated bot. And for newcomers, I will quickly remind what is the idea of automation at Bitsgap. So what is the the logic behind the scheme? So the idea is that we have a trading range defined by the highest sell price and lowest buy price. And within this trading range, the bot is trading on our behalf. I mean, it looks for the opportunities to buy low and sell high. And to do that, there are grid levels within this trading range. Or in simple words, these are our limit sell, red lines, and limit buy orders. So that's limit, sorry, green lines in this case. So assume that the price reaches 11,500. The bot will sell the base currency, and the base currency stands for the first ticker you see in pair, and takes the quote currency from the market. All right, so that's the example of Bitcoin trading to USDT. That's why we cash out with USDT, and a portion of this cash out is then taken to plot a new buy order, and by that we ensure an almost never lasting process of trading, of like a constant extraction of profits from the market. All right, and the difference here, you see, 11,000 is what 500 is what we take from the market. We take then 11,250 to create a new order, and the difference is in this case the bot profit. All right, so that's a quick reminder of what it takes. I mean, what is the logic behind our bots and what is the idea here? So how we uh, um, accumulate profit in this algorithm. So let's go back straight here. And so yeah, green circles, these are buy orders executed. Red circles, these are sell orders executed. On the right side, you have the column which stands for decision-making process, where you have to select your strategy. And many traders and investors who've been using Bitsgap for quite a long time, they are still asking what is the primary difference between the ASBot and the classic bot. And I think that finally I came up with the best explanation when it is best time to use the ASBot and the classic bot. So stay with me. So that's actually the classic bot. It always buys and sells the same amount of the base currency, and that's why investment with the price level varies. So when the market is rising, it's gonna buy the same amount, and of course when the market is rising, the price is bigger, and that means that to buy the same amount of the base currency, it would require bigger investment. And here is the calculation. You see the price is rising here, and the investment in this case is rising. And that's why the classic bot strategy is the best option for the rising market. All right, because by that you end up with a bigger investment in the coin, and you participate in the rally more. Whereas when it comes to the ASBot, it buys the different amount of the base currency with each price level to ensure the parity in investment. So the investment value per each level, per each price level is the same. All right. So that's why ASBot is the best option to trade on the sideways market. And if the market is falling, then ASBot is also the better performer than the classic bot because of the cost average effect, as it invests only the same amount of the base currency on each price level. And when it comes to the classic bot, so you see, once again, the sideways market, and on this sideways market, the performance of the SBOT, and that was actually XRP trading to USDT, was 0.9% within the period of only 3 days, whereas the classic bot has only generated 0.57% on this sideways market. So when you see these swings forming sideways or a falling market, then the SBOT strategy will almost by twice and sometimes even more, it will outperform the classic strategy. All right. But when it comes to the rising market, because of the built-in investment logic of the classic bot, it will always outperform the SBOT. And here's the example with the same XRP USDT. You see rising market, and within the period of 4 days, SBOT generated 53%. All right. Whereas the classic bot generated on this same period, on this same crypto, you see, same range, same cryptocurrency, it generated 70% of the profit. So that's, you see, by 17%, it outstrips the SBOT. All right. So that's something for you to keep in mind as a rule. When you expect that the market is about to breach the resistance line, it is about to continue the rally to establish a new higher high, then stick with the classic strategy. Whereas when you expect the movement like this, sideways, like you see, more or less sideways, then SBOT is exactly what you are looking for here. So let's use the example with the SBOT, and notice that I already have the system which automatically assigns the trading range, and you don't have to actually stick with it. You can always change the upper price, lower price to set your own trading range. So maybe you are trading from the support and resistance line, so that's maybe the case for you to set your lower price at the level of resistance, support, and your upper price on the level of resistance in this case. So you have the pair here which you can choose. You can manually change the upper and lower price, but I strongly recommend you to do this on the chart here, and because it really takes less time compared with manual setup. And the grid quantity, which you can also set, is here. So the idea of the grid amount, so the more you plot, like the amount of limit orders, the more investment here is required in this case. And for having more grid levels, your grid spacing is going to be reduced, and that means that the marginal profit is going to be also reduced. But since there are so many grid levels, this effect of the reduced grid spacing is offset by the number of trades in total. So you will still end up with a decent return by the end of the month, all right? And you can always backtest strategies by clicking on backtesting. So what would be the performance of this configuration with 160 grid levels on this cryptocurrency pair within the period of the last month, let's say. So let's select from the 3rd of November until today, and you will find the exact performance of the bot. So that's 14% over here. Let's compare it with 40 grid levels, where you have grid spacing increased. So your profit, like margin profit here, is almost by 3 or actually 4 times bigger than we had. So let's see the difference. Again, from the 3rd of November until today. And you see the result is 30% here. So yeah, definitely here it has outstripped this setup that we initially had. But in other cases, it actually depends, depending on the cryptocurrency that you select, and the way you use this system is by finding the proper cryptocurrency for you to trade. So if you see that for AGI to Bitcoin on the sideways market, the trading setup with 40 grid levels works better than with 160 grid levels, then that's the case for the AGI to have this optimal setup with only 40 grid levels. Okay, but keep in mind that the fewer grid levels you have, let's say 4, the wider your space between limit orders becomes, and that means that there are less chances for the market to trigger all of these limit orders. Because you see how how strongly the market has to swing to execute all of these limit orders. Whereas when it comes to in more numbers, like more grid levels like this is what I call scalping the market. That's the highest frequency possible here. And that means that with almost every price tick, you get a trade from the market because your orders are so they are so tightly located to each other. They are like the spacing is so narrow that the market, well, the bot will trade like crazy for you. All right, it will take uh, less return than compared with 40 grid levels, but it will trade more, and this, like in many cases, it offsets the effect of reduced like the grid quantity. uh, yeah, well, the Navy 2K is telling that those bot profits are so high that it seems you can become millionaire in some years. Well, you have to keep in mind that the profit you see here is the profit generated by the bot in the quote currency. So you see AGI trading to Bitcoin, so the profit is going to be generated in Bitcoins. But it can be the case that AGI at this time will drop, and this will affect your overall return, and that's why we have investment change metric and bot profit metric. All right, and that's why they differ, because the bot profit takes into account only the profit generated in the quote currency, because regardless of the market direction, the bot is able to execute trade because to extract profits, because what is required is just for the market to swing, and it doesn't matter in which direction, upside, sideways, or downside. As far as it swings, it creates these tiny opportunities for the bot to buy low and sell high all the time. But as far as you have the base currency in the trade, then the base currency value can be affected on the falling trend. All right. So even though, let's assume, uh, let me delete all of my pieces of art over here. So assuming the trend is falling, in this case, your base currency is falling, so its value depreciates. Whereas the bot still generates profits in the quote currency, and that's why you always get the quote on your balance. So that's the plus. And this plus effect, as the bot generates profits on the falling market, it always offsets the negative value change of the base currency. All right. So even though you see that the profit here generated is 30%, it can be that during this period the value of the base currency has also affected your total investment, and you end up somewhere in 25%, let's say. So that's something for you to keep in mind, and that's why these automated bots, they are perfect at the sideways market and on the rising market. All right, and even if the market is falling, automated bots, they still outperform a simple hodl strategy because of the cost average effect, as it always buys as the price dips, you end up with the lower price you entered the market than if you would just use a simple hodl strategy. And I actually have some cases for you to show you exactly how automated bots, they outperform the simple hodl strategy on the sideways and falling markets. All right, so let's use maybe another chart. Let's use Acro trading to Bitcoin. So yeah, we now have selected the strategy. No, actually, let's use another one. By the way, if you don't know which crypto to trade, you can use recommendations. They are based on the backtest results, the one I just shown you. So these are top performers in terms of the bot profit generated. So you might consider them at least based on this metric to trade today. So let's use CVC to Bitcoin. Let's make some quick adjustments like this. Let's use, let's say, 40 grid levels. Investment you set over here, and you see the exact amount that will be invested here and exact allocation of your assets. So you see, as far as you have sell orders, that's why you must have base currency already, and you have also buy limit orders, so that means you must have enough of the quote currency. All right, so in order to sell something, you must have it on your balance. So that's why you need CVC at the time of launching the bot. And in order to buy something, you must have the quote currency to buy CVC here. So that's the way of how you analyze your configuration. The wider your sell range is, the more base currency is required here. So let's click on start the bot. It will automatically ask me to buy this amount of CVC, because it might be the case that you don't have this amount on your balance at the time of initiating the bot, and it will automatically buy it at the market price here. You don't actually have to stick with this node. You can go to trading here, and you can manually buy this amount of CVC with the limit buy order to pay a fewer fee in this case. But if you are in a rush and you don't have this time, then this can be an option to market buy it with this recommendation. And here we go, you get the notification. Yeah, so here we go, the market order placed. Yeah, well, that's for some reason was an error here, but still we end up with the trade. So that was the bag, I think, which I will instantly report as soon as we finish this webcast. So here we go, this is our trade. You see it is active and all information is provided, metrics. So for some trades that I already have here, I can analyze the profit generated on a daily basis. So that's the way you look at the chart. And you see, at glance, like at first glance, it looks like the average return on this trading configuration for REN to BTC, the one that I have with this exact investment sum, with the amount of grid levels that I have and the grid spacing of 0.5%, you can expect at least on a daily basis this on average. You see that? So that's the way of how you look at the average daily return that you can generate at glance. Of course, sooner we will add these metrics, like they will be fully automatically calculated. So you will see not only the bot profit, but the daily average return. And maybe we will also add this metric to see what is the deviation from the mean. Okay, so some metrics will be provided, because we are always working on better optimization and working on adding new metrics so that you could analyze your performance even better. So far it looks like this. About statuses you can read in the blog. We have the out of range, we have pump protection, we have active. So no need to explain this during this webcast, because you can read this in the blog that we have. We have samples provided. So yeah, Let's stick with the presentation and see what else I can show you today. So I didn't actually want to show this one. Let's go directly to yeah, so I wanted to show you how exactly automation outstrips the simple sideways and falling market. So here's the example of, okay, my fault once again, this one. Slideshow from current slide. What's forward? Okay, so never mind this one. You see that's the example of Bitcoin Cash trading to USDT, and you see I have this arrow pointing at this specific price here. So let's assume that this is the price at which you would just buy Bitcoin Cash, and until this price level you would be up by 5% only. So that's simple hodl strategy here, 5% of the return. Whereas when it comes to automation, you have the bot trading on all of these swings. You see all of these circles on the chart. So all the time here it has been extracting profits from the market. And that's why you end up with automation with the return of 14%, comparing with a hodl strategy where you would only get 5%. So that's like the perfect example to demonstrate how automation at Bitsgap here, it outstrips an ordinary hodl strategy. All right. So if you have as bot on a sideways, it will perfectly generate profits on your behalf 24/7, just following the market, just executing these trades each time the market swings. So you end up with a decent return. All right. So that's 14% compared with 5%. So that's how it outstrips a simple hodl strategy. And I actually had somewhere this example with the falling market, and for some reason I don't have it in today's presentation, but yeah, well, for sure next time I will show you. But you already, it's already crystal clear that even on the falling market, when the bot extracts profits, these profits they will offset the negative value change of the base currency. So you end up with a better return, same as on the sideways here. All right. Uh, Let me see if I have some interesting questions here. And by the way, commission is actually taken into account, because when you see this grid spacing, let's say 2.91%, the exact spacing actually is bigger because in this number the fee is already taken into account. All right. So in reality, it's not 2.91%. It is somewhere around 3.1% or something grid spacing. The reason why we show you 2.91% is because the fee is already priced in here. And you don't have to worry in this case. So as far as you can launch the board, it means that everything is all right and you never end up with the fees paid being bigger than your total return. All right, so that's not the case here. And to see what are the fees paid, let's click on any trade I have here, view, executed orders. You see fee, they are already priced in, they are paid. I have some trades with, let me see the grid spacing, I think somewhere over here. You see grid spacing 0.13%, all right? But I still here, not this one, this, yeah. So you see I end up with a positive return, you see? So that's why you don't have to worry about the commission anymore. It is already priced in. The profit you see, it's like the pure profit, it's the net profit which goes directly to your balance. I hope now you get this idea and you will no longer worry about the fees and all of this. structural expenses, because everything is already priced in the system here and calculated on your behalf. So yeah, that's the way you use this configuration panel. We also have instruments like take profit, stop loss. They are the same as for the spot market. So as soon as the, oh, actually I'm wrong. The take profit here works only for the investment change. So as soon as the investment change, let's say, reaches 15%, it will automatically close the trade. So it will sell all of the base currency in the trade, and it will also close all of the open limit orders. Because for instance, for ING to USDT, you see I have 100 open orders. So as soon as it reaches my take profit target, it will close all of the left open orders on the exchange. We also have the stop loss, so that's the level below which we can no longer afford trading. So that's where the bot will also close trading. It will sell all of the base currency and it will cancel open orders. And you can set it manually as well. You can drag it here like this. Well, when it comes to the trailing up instrument, that's the instrument that we have so that the trading range follows the market rally. So I have the quick tutorial here as well. So how do I start from current? Yeah. So that's the initial trading range we played with. And let's assume the market rises and it establishes new higher high like this. So in a simple configuration where you have system without trading up, so like so basically your trading up is off. In this case, you would get stuck in this trading range. But when you have your trading up on, then the system, like the trading range, will automatically follow the market like this. Assume it establishes new higher high, then what happens? Exactly, it will follow the market like this. But what if the price breaches the support line? And we remember the rule that the bot is only trading for us as soon as the price stays within the trading range. Well, in this case, it will not trade here because you see the price is below the trading range, and it will continue trading only if the price reverts back within the area of our trading range, like over here. What if it establishes a new higher high like this? It will follow the market like this as well. So that's why it is called trailing up, because it only follows the market up and it never follows the market down. All right, that's what we have here. And with this instrument, you can have a stable participation on the market rally. So even if you, let's say, if you have some other things to do and you are no longer monitoring the market, when you have the algorithm with the trading up and the market starts crazy, like it starts rising like crazy, it breaches the resistance line of your initial trading range, it still will follow the market. All right, so you see, initially my trading setup was here, but as I have had this trailing up instrument on, it started to follow the market and I end up with my trading range over here. So I managed to participate in this crazy rally even though I was not in front of the computer at that time. Otherwise, if you do not or maybe if you forgot to switch on the trailing up instrument, then as soon as the price breaches the resistance line, this is where the trading halts. So the bot will no longer trade because it is only limited to the boundaries of the trading range. And since we don't have trading trading up here on. That's why it is unable to follow the market rally. And that's why we missed this opportunity to earn even more. So make sure you use the trailing up if you want the algorithm to automatically follow the market rally. It can be the case for you that you don't want this option to be set because you would rather manually close the bot and open a new one with a new trading range based on your new better condition. So it's fully up to you. All right, it doesn't mean that with the trading up your performance is going to be better. No, it's just that with the trading up you you have to spend less time monitoring the market, because with this instrument you ensure that the system follows the market rally in any case. All right, so maybe you will be sleeping at that time, and when it establishes new higher high, the bot will follow the market. All right, and at this time. So that's what it takes to enable trading up. And by the way, if you at the time of launching the bot you forgot to set these instruments, then you can always go and select them later. So you see CVC trading to Bitcoin, that's the one we launched now 9 minutes ago. You click on view, and here you can set take profit, stop loss right after you launch this trading configuration. And of course you can switch them off. So far we have one trade executed, open order, so everything you need is already here. So let's see if we have any interesting questions. Okay. Okay, so let me, since we have a bit, well, actually we are running out of time, but if you still have time, I can show you some trading configurations that you can use. For some of you who participated in previous webcasts, it might be already an old strategy, but still, that's the one I stick to, and they have proven to be successful in my case. So the one I prefer is actually the rising channel. So when you see the market moving like this, it bounces off the support level and reverts from the resistance. You spot the pattern here, all right? And this pattern name is channel up, and you can play with it. I mean, you can trade on it. So as soon as it bounces off from the support successfully, it means that the pattern has sustained and you can profit on it. So set your stop loss below the support level. Set your configuration so that your upper limit price is right up until the next resistance level, and your lower limit price is somewhere around the support line. Stop loss you plot below. So that's a possible configuration that you can use, and that's the one that I actually prefer. So as soon as I see that the market, let's say it falls like this, and when right after this I see that it bounces off successfully, so for me this bounce off is a confirmation that I can enter the market, and with this trading setup I can enter this market. Otherwise I would never enter this trade. So as soon as I see the successful bounce off, like over here, like bounce off over here and over here, so that was actually the time of the formation, then we just skip this one. So yeah, as you see this successful bounce off, enter somewhere at this level. Well, actually my drawing skills are not good enough, but I hope you see my arrows here. So yeah, that's the level at which you might consider entering the market with this trading setup. So you see your stop loss is very close to the entry. That's why your risk is very limited here, and that's why I like this trading configuration. Another one is a triangle symmetrical top, which is this one. So that's what you see here is the market accumulation. That's where buyers and sellers, they are fighting with each other, and as soon as we see the price breaching resistance up, like over here, this is gonna be a confirmation that bulls took over bears here. And most likely, especially if you spot such pattern formations on a rising trend, then statistically most likely it will really continue moving even higher. All right, but remember that this is only a statistical analysis, and it doesn't mean that it is always guaranteed that on a rising trend, when you spot this pattern, you spot this bridge of the resistance, that it is 100% guaranteed to follow upwards. No, it's never like that, but it's just that statistically it has proven to be relatively successful. And even though it is successful, make sure you plot stop loss below this formation to limit your potential losses. All right, so that's the way we trade. That's the way I trade. That's the way I follow the market, and that's the way I answer. Like I look for entry and exit price levels for my automated bots. All right, and you can always analyze your trades in the history. So you see, so far these are my results, and you can analyze which trades were successful and which trade configurations for you have proven to be more successful comparing with other trades. So since you have this history column here, you can always learn from your mistakes, and you can always find your like your strong side, so your best trading configurations, your winners. All right, so always analyze your trades after you close them. You can select the range for which you've been trading to analyze more. So yeah, and make sure to practice in the demo mode, which is once again a risk-free trading simulator for you to experiment with virtual money before risking real capital. So it is like the best way for you to learn about all of these instruments like stop loss, trailing up, take profit before risking real money. So backtesting, once again, use it to find your optimal cryptocurrencies to trade, and use it to validate your trading configurations. So let's say you want 50 grid levels, and just on let's say on act trading to Bitcoin 50 grid levels, always backtest to see if this configuration is optimal. So you look at the backtest, you see that here the market was, well, actually that's more like the sideways for me. So that was 25% for this period of time. So what about maybe 20 grid levels for the same period? So you see slightly different returns. So play with this instrument that we have here to find your optimal cryptocurrencies to trade, so that then you will be able to diversify your strategies. So you can trade spot market, all right. You can trade futures market, which I define as a separate market because of the leveraged opportunities and because of the speculations. Oh, actually, the comp is rising, and I really enjoy this. So let's see what's the profit as of now. Yeah, so for some reason it's lagging a bit. So yeah, it really takes time for it sometimes, especially because I have bad internet connection right now for some reason. So yeah, you see, it's yeah, I really like it. So futures market and automated bots. So these are three ways you can trade cryptocurrencies, and you can always create your own strategies on the spot market, on futures market, and on automated bots. You can use my ready-made strategies, which I post here at Bitsgap. You go to blog, and here you have you see automated strategies. So these are ready-made strategies that you can use. You see channel up, the one that I explained to you, these for the sideways market. So everything is here for you guys to take advantage of. So really, I've worked on it. It's time tested. These are strategies that have proven to be, for me, quite successful, and you can play with them. All right. And as soon as you play with them, you will end up discovering your own better strategies, and that's the way we grow as experts on. And you can always share your results with our community, so that we will always be like all united, so that we will always end up with best strategies on the market. All right, so like when we have a very strong community, we end up like that's the win-win scenario for all of us. So that's why we have all of these instruments here at Bitsgap to experiment with the demo mode, the backtesting, to find your best strategies to share with the rest if you want, so that everyone is in the win-win scenario. So yeah, that's it for today. We are really actually running out of time, and I hope that you enjoyed this webcast, and I hope that um, you find this information useful, and you can now go straight away to play with some strategies to beat this market. All right, because we are now in the rising market, and some altcoins are still lagging behind the Bitcoin, and maybe they are about to bounce off as well. So yeah, make sure to empower yourself, to embrace yourself with these new instruments that I've provided you with today, to outperform, to come to yeah to apply optimal risk management to beat the market. Let me see the yeah okay. So that's it for today. If you have some questions left, then feel free to ask them here in the forum. You can also ask them in the community in the Telegram, because yeah, that's the way we work. And I always read your comments to improve the quality of my webcast, so that next time you will get more information, more useful information. So thanks for your attention, thanks for your time. I really appreciate that. And yeah, enjoy trading, yeah, and never risk more than you can afford. Make sure you use the stop loss and all available risk management instruments at your disposal to control the risk, all right? And control your emotions. So yeah, see you next time. Bye.